Today, I'm going to be presenting Fed Up, the Fed's 2023 financial troubles. I'm Ron Sneller. Thanks for tuning in. Today, guys, we're going to look at the Federal Reserve's financials through year end 2023. Now, back in 2008, the Federal Reserve, also known as the Fed, embarked on this novel, should we say, experiment in monetary policy by transitioning from a scarce reserve system to one characterized by abundant reserves. Now, in addition to inflation, this experiment has resulted in some other developments that are rather worrisome. Higher interest rates have resulted in substantial unrealized losses on the Fed's securities portfolio. Simultaneously, they have caused the Fed to pay out more in interest to banks than it is earning, and this has resulted in sizable and ongoing losses. To offer deeper insights into where things stood at the end of this last year, we're going to take a look at two charts and one table. But before we do that, I first want to give a shout out to Brian S. Westbury, Chief Economist, and Robert Stein, Deputy Chief Economist over at First Trust, for providing this very valuable information and insight. So thank you, gentlemen. Before 2022, the Fed was able to buy Treasury and mortgage-backed securities that generated higher yields than what they were paying banks. Consequently, the Fed consistently earned substantial operating surpluses, which were then remitted to the Treasury Department on a weekly basis. Over a span of 15 years, the Federal Reserve contributed an average of over $75 billion annually to government revenue through this mechanism. But now, after the equivalent of 21 quarter point rate hikes over just the last 2 years, it pays banks 5.4% per annum to hold reserves, which means that's much more than what it's earning on its portfolio of Treasury bonds and mortgage-backed securities. You see, this has led to losses of $116 billion in 2023. Let me repeat that. The Fed security portfolio had $116 billion of losses over 2023. These accumulated losses are called a deferred asset on the Fed's balance sheet and will only be paid off if and when the Fed starts to make a profit again down the road. Now, the Federal Reserve has $948 billion in unrealized losses on its balance sheet. That's a lot, right? But it's important to note the unique position that the Fed is in. Unlike many financial institutions, the Fed doesn't face solvency concerns because it's not required to mark its portfolio to market values. The Fed has the option to hold on to all of these securities until they mature, and there's no regulatory agency that can intervene and force it to shut down due to these accumulating losses. With total reported capital of just $43 billion at the end of 2023, the Fed's unrealized loss of $948 billion represents a staggering 22 times its capital. In 2023, the Federal Reserve compensated banks and financial institutions a total of $281 billion for holding reserves, marking a significant increase of 175% from the $102 billion paid out in risk-free income in the year 2022, a sum that is ultimately borne by taxpayers like you and me. Now, market analysts in the Federal Reserve anticipate a reduction in the federal funds rate by a total of 75 basis points through 3 cuts this year. The 3 cuts is what's been expected in 2024. This adjustment, coupled with the reduction in the Fed's balance sheet throughout the year, is expected to decrease the Fed's expenditure on interest payments to the banks and to the financial institutions. However, the projected expenses remain remarkably high. And the economists over at First Trust, they estimate this to be between $200 billion and $250 billion, indicating a continuation of significant payouts in the year 2024. This report was prepared by First Trust Advisors LP and reflects the current opinion of those authors preparing the data and the reports. It's based on sources and data believed to be accurate and reliable. Opinions and forward-looking statements expressed are subject to change without notice. Now, this information does not constitute a solicitation or an offer to buy or sell any securities. I'm Ron Sneller. I appreciate you tuning in for this Fed Up update on the Federal Reserve's inner workings and what their finances look like. I hope that it provided value for you, and I hope that you learned a lot. Thanks for tuning in.